Hello again, I'm Anisha Tank. You join us in the Europe, Middle East and Africa belt of the Singapore FinTech Festival's 24-hour live coverage. Now we're going to focus on investor priorities for 2021. And as markets mature and the adoption of FinTech solutions proliferates, new products and service models are rapidly emerging. In the next session, Dushyant Shahrawat, Director of Strategic Insights and Advisory, FinTech Investment Banking at Rosenblatt Securities, will ask investors the key verticals they'll be focusing on for 2021. And joining in the panel discussion will be Lucy Demery, Managing Director and Global Head of FinTech Banking at Standard Chartered, Fady Abdel-Nour, who is Global Head of M&A and Investments at PayU, Nicholas Smalle, who is Partner at Apis Partners, and Fabrice, Grinda, who is Founding Partner at FJ Labs. To pose questions to the panel, which you can do, just click on the yellow button. It's beneath the session window. So let's go over to Dushyant to hear the investor discussion on 2021 priorities.
Great, thank you very much. Welcome, guys. It's tremendous to be here, and what a delight to moderate this panel with four amazing professionals. We've got folks coming in from London, from Singapore, from Hong Kong. I'm here in Boston, and Fabrice is joining from Turks and Caicos in the Caribbean. So very jealous of you, Fabrice. So I know the session is talking about 2021, but I'd be remiss if we didn't spend a few minutes talking about what happened in 2020. So let's start us off with talking about what happened in 2020. And why don't we sort of go around the room, maybe asking Lucy to start us off with, how would you categorize 2020 as a year for FinTech? Would you say it was the most profound year? And let me just ask you to open up with that, and then we'll sort of peel the onion and sort of look at what happened in different sectors in 2020. So how would you categorize 2020 for FinTech?
Well, it's been an incredible year. I think we've seen the fintech industry really build its stride in certain areas and outperform certainly other industries, and work really hard to try to service small businesses, people as they migrate online for the first time. So where I've seen the best activity really is in large payment platforms, especially those that service e-commerce, fintechs like Stripe and Adyen, who have been helping scores of new people come online and introduce value-added services to them as they cope through the pandemic. And really, I think it's been a whole lot of new digital adoption by necessity, which I hope will endure beyond the pandemic as people and businesses have now discovered this new digital life.
Great. Who wants to go next?
I'm happy to jump in. I think, look, if we do look back at 2020, I think a couple of things stand out. One, and I think Lucy pushed on that, is really how certain sectors which have been really resistant to digitization jump to the fore, right? And I think specifically about how many governments utilize kind of lending platforms to push loans to SMEs. So guys like Lending Club, but as well in the UK with Funding Circle, have been at the forefront of really pushing kind of those government-backed loans to many SME clients, and those will ultimately be coming around clients in the longer term. Equivalently, I think other areas where we've seen kind of smaller SMEs, enter like platforms like Shopify, et cetera, and digitizing their work streams, that was also a big push. And I think FinTech had played an important role in achieving that. But more importantly, that will be kind of a driver of areas of the economy that have been like slightly more resistant to digitization carried forward into 2021. And that's really also where we're looking at playing a more active role. So previous set areas where you were seeing a holdback, healthcare, etc., that's massively transformed over the last 3 to 6 months.
Great. Fady, how would you categorize 2020?
Yeah, I think it was a year that it started off, in a bizarre way where we really didn't know what was going to happen, and we're really, cautious to look at investments. But then as we looked at our portfolio, I'd say most companies that had exposure to online e-commerce as opposed to physical point of sale commerce really accelerated, with the exception of those companies that were in areas that had very strict lockdowns initially. And I think some of those companies suffered to start because the e-commerce companies couldn't operate. But with the exception of that, I mean, we had companies in our portfolio that grew kind of volumes 80, 90%, when the previous year they were growing at kind of 30, 40%. So, and that's just digital payments. I think from an investor's lens, we have been, I think, a bit more cautious this year, I'd say, and kind of spent a lot more time on just doubling down on the existing portfolio, as I think new investments, at least for us, were a lot more difficult to consummate.
Yeah, absolutely. That's one of the themes that we saw as well amongst investors like you guys in the States, that in February, it felt like, or March first week, that the bottom was going to fall out. And then by June, things started stabilizing. And by Labor Day here, and after September, there was just, completely shift in sentiment. So if somebody looked at the start of the year and the end of the year, the bookends, you would absolutely miss, the turbulence that happened over the course of the year. So I think it's one of those years that if you look back, it would look pretty great on the numbers in terms of M&A, in terms of funding, but the numbers in aggregate don't tell the picture of the emotional state for investors and entrepreneurs and all of us as participants in FinTech and what happened in the course of the year. Fabrice, from your standpoint, again, same question, how would you categorize the year?
I'd say 2020 is the year FinTech came of age, because of course we had the mega trends of payments like Stripe or Adyen, or maybe the neobanks like Revolut. And the reason I'm saying it's coming of age is it's now happening in every country. So we're now seeing neobank equivalents everywhere, like Klar in Mexico. And a lot of things that were not originally FinTech are kind of becoming FinTech. I think I disconnected.
No, we can hear you perfectly.
Okay, perfect. For instance, a lot of our B2B marketplaces that we're investors in are now they're funding their business model as things like factoring, and so are becoming fintechy. And at the same time, the core horizontal lending platforms are being verticalized and attacked. So we're seeing companies like Clearbank, which is completely revolutionizing SMB lending. So if you have a Shopify site or an Amazon store, they log in, they look at the profitability of your marketing, and they'll lend against that. I mean, that's completely revolutionary. You can imagine that no one, Citibank will never do that. And so there's an explosion of fintech writ large that is now reaching levels of both the general economy and the online economy unheard of before.
Great, perfect. The other thing I want to just ask you guys was just, peel the onion one level deeper, and let me put you on the spot and ask you, what were, in your mind, one or two notable developments this year? And let's be as specific as possible. Like, what struck out in your mind, whether it's, Striping valued at $35 billion. More recently, they expect to do another round at maybe $100 billion valuation. So what's the one or two notable developments? And if you can be specific about a company or an event, that'll be tremendous. And this time, let me ask maybe Nick to start us off. One or two notable things that happened in the course of the year, as specific as you can be as possible.
Yeah, sure. So a big thing for me is effectively the rebundling of the fintech stack. So when I look at businesses, like I talk about Toast, Toast did an $8 billion round this year as the ISV. I think a lot of people think towards Stripe and stuff like that as being kind of the next generation in payments, but really these integrated software vendors who are digitizing much more of the business's workflow and then embedding payments as either a way to incrementally increase value per user or effectively as a loss leader. That is really one of the aspects I think that to us is a key trend going forward. So, Fabrice spoke about this. I think, in the past we've looked at fintech and then we've seen SaaS businesses, but the line here is completely blurring, right? And what is a SaaS business and what is a fintech business? It's really just different ways of monetizing a single client relationship. And you'll do it through lending, you'll do it through payments. And I think to me, when I look at a business like Toast, it really does capture a lot of those elements going forward.
Great. Fabrice, you want to go ahead? Tell us in the B2B marketplace, which you know particularly well, was there any notable event or development that happened that particularly stands out to you in 2020?
Well, first of all, we're very lucky and happy investors in things like Stripe, Klarna, the Toast, et cetera. So, and all of these, I guess the notable event for me, I mentioned a few of them in terms of democratization, verticalization. Yeah, look, in the B2B marketplaces, we're now investors in all of the major, for instance, B2B grocery businesses. And the main way they monetize is just by paying, whereas the grocers may be paying that 30, they're just advancing to the companies that are to their suppliers and paying immediately and taking 4 or 5%. That's one of many, many, many examples. Maybe the mega trend is a lot of companies that you would not think of as doing fintech or becoming fintech. And I guess Toast was an example, but think of Shopify, right? Shopify Capital in a way is providing capital and financing. And even, and by the way, Stripe is becoming a provider of capital to its clients in without dilutive capital. It's another form of financing your company, and that's becoming very common. It's not really competitive with VCs. These are not for VC backable companies. It's more for SMB. But to me, that's a mega trend that's going to continue, and it's going to completely reinvent SMB financing.
Right. Lucy, what stands out in your mind as notable from 2020?
I think the guys have picked up a couple of good ones. I'd say also it's really interesting now how investors are consolidating into the larger late stage platforms because, funding has, of course, been scarcer this year. It's still, as of last quarter, down over 20% year on year. But we've seen now a rise of mega rounds. Actually more so than we've seen since Ant Financial did their $14 billion round back in early 2018. For sure in payments, but also, in other areas like FinTech, the likes of Policy Bazaar in India attracting still more capital. In Singapore, we've seen Singlife. In fact, we financed and advised on Singlife's merger with Aviva Singapore to drive, transformative scale for their digital offering, which was a deal backed by TPG, a $2.4 billion deal, US dollars. So really, I think still investor appetite for the larger platforms that can drive outsized growth still and are faring well. It's a lot harder still though in the early mid stage. Fabrice can maybe speak to this with more expertise than me. Interestingly, though, we've still seen seed funding pick up in Q3. Perhaps that's due to the profile of angel investors, relatively insulated from the crisis, looking to deploy capital, but really where the dearth of capital has been more around early mid-stage institutional investors who, like Fady said, have had to focus on shoring up their existing portfolios.
Do you mind if I actually jump in and comment on that? Yeah, I mean, for us, this has been probably the most active we've ever been. Where we've invested this year probably in 140 companies or 150 companies. It's probably been, and we're seeing extraordinary opportunity. And I think in a way, necessity is the mother of invention. We're seeing more creativity, more extraordinary companies being built than ever before. And if you look at the last, frankly, 100 years, crises both accelerate underlying trends and lead to productivity growth. So the Great Depression, as horrible as it was for people who lived through it, was the biggest period of growth, productivity growth in the US. And most of the defining companies of the last decade, like Uber, Airbnb, Slack, WhatsApp, were all created in the 08-09 Great Recession. And I suspect the same thing will happen here. And we were in privileged enough position that we were impacted from a cash flow perspective. And so rather than just, batter down the ashes, we doubled down. And we've invested more and more aggressively, I think, than ever before.
Fascinating. Actually, if I can ask Fady to just chime in quickly, one or two major notable events for 2020.
Yeah, I think the one thing that comes to mind is, given how the year started and how credit business have really performed during the crisis, just the emergence of BNPL as a really interesting sector kind of surprised me. And I think a lot of this has to do with people looking at companies like Afterpay and just the incredible execution that Afterpay has demonstrated. But then it's really gone to other parts of the world. I mean, we have a product in India called LazyPay, which is a BNPL product. But we see folks like Hula in Singapore launching it, and across a lot of different markets. So I mean, I think that's one to me that, given how I guess investors were viewing credit investing in digital credit, how attracted they got to kind of the BNPL model, which is just a little bit different form of credit during this time.
Great. I think for me, Lucy, just picking up on what you said, you mentioned Ant Financial or the Ant Group. And just the fascinating story of, the lead up to the Ant Group IPO expecting to happen, and 6 days prior to that, or 5 days prior to that, the government of China basically pushing it back, or maybe canceling it forever. Who knows? But that was just such a about phase, because you might remember how much ink was spent much of this year talking about the biggest IPO of all time, and then eventually didn't happen like 4 days prior to that. That was kind of in my mind, stuck in my mind as a notable event. So let's jump into very quickly. We've got a tremendous global perspective here. A lot of you are very, very involved in not just the developing markets, but particularly the emerging markets, and we've talked about some of that. But let's just peel the onion a little bit more around what some of the regional trends were, what the regional differences were in the fintech space. And let me start more broadly, help kind of the audience understand a little bit about how has the investing climate been across regions? And the regions we can start off at very large would be North America, continental Europe, Britain, and Asia, Africa as well. And then, if you can double click on a couple of countries, just talk about the investment climate in these markets, and what are some of the sort of, how would you compare the investment climate in North America from Europe versus Africa at a broader level? And then if you can get specific about individual countries, that'll be great. If you want to start us off, Nick.
Yeah, sure.
Give us a sense.
I mean, I do think probably when I think about fintech in the last 2 years, investor sophistication. I mean, we're a fintech specialist fund, but if I look at even our generalist funds and how the appetite and the knowledge has tooled up, I would say broadly, and this is in developing markets and developed markets, investor understanding of the business models and the ability to scale and TAM has actually kind of rapidly grown over the last 2 years. So I think that's a big thing that we're seeing here, and that's manifesting itself in different ways across each of these markets. So we see a lot more kind of localization of ideas, where in the past, we talk about guys like Policy Bazaar, Razorpay, which are really kind of copy paste of business models that have been relatively well funded in other markets, and have very good and aggressive teams to run them. But I think one of the things we've seen in the course of this year is the movement of some of these more localized models. So in a place like India, we are looking at people who are trying to digitize small stores and using existing technology and pace to do that. So Geo would be a good example, but there's enough people around that. Similar that we've seen that in Indonesia, and really kind of investors getting behind and understanding that some of the more local solutions, which aren't kind of copy paste Silicon Valley, do have good runway to do. And I think the two markets there are definitely Indonesia and India. I think practically there's very few developing markets globally where you actually have a market size that can sustain a TAM that has a business in excess of $1 billion valuation. I mean, market sizes are naturally constrained, and you can build a couple $100 million, but the cost of building these businesses aren't like incrementally less in these. And so I think investors have kind of very much focused on those markets for the time being. That's a key kind of thing we've seen. Also, the movement of obviously some of these super apps into financial services, so Grab, Gojek, etc. Right? And as an investor, you do have to think very carefully, because the cost of capital for these guys is significantly lower than many of their competitors, and their client and the consumer-facing side would be different. So I think, to summarize that, I'd say what we've seen in developing markets, and specifically again in India and Indonesia, is a localization of new fintech opportunities, as well as an expansion of some of the super apps to try and monetize that fintech wallet share.
Terrific. Fady, from your standpoint, tell us the investment climate and differences you've seen across the different regions. And if you can, give us an example of a couple of countries that stand out.
Yeah, sure. I mean, I think we are a lot more focused on the emerging markets, but have done a handful of things in the US, and definitely kind of keep our eye on that. And I think markets like that, where you have in California a concentration of companies and VCs based in those markets, where people don't need to travel to get that funding done, it felt like that didn't slow down as much as maybe if you think about Southeast Asia, where maybe Singapore's a hub, maybe Hong Kong's a hub, but most people don't have a ton of teams based throughout that region and have boots on the ground really everywhere. And so just kind of the ability to kind of meet those folks and diligence those entrepreneurs, I think made Southeast Asia perhaps a little bit more challenging than deals in the Valley, which seem to keep getting done at a rapid pace. I'd put India probably in the middle ground. We spent a lot of time there. It felt like India was also getting a little bit less competitive than it was in the past. I think part of that is not just COVID, but some of the geopolitical stuff around the Chinese money not being able to come into India actually left a little bit of a vacuum in that market and actually made it a little bit less competitive than it might have been in last year. And we were able to, double down at least on one portfolio company, I think at a quite good valuation. And hopefully we'll be able to, keep doing that on a few others as there's a bit of a vacuum in that market.
Great. Lucy, you've got a lot of clients all over the world. Give us your perspective around sort of, regional differences. And again, I'm going to press on this. There are particular countries that stand out, as Fady said about India, Indonesia. Give us a sense of, specific countries that you think are really doing interesting pioneering work around fintech.
There are so many. I mean, to be honest, in terms of funding trends, the US and Asia have seen pretty similar trends. Europe is starting to pick up slightly. Africa has certainly picked up substantially, albeit from a smaller base. If you want a particular country within Africa, I'd say Nigeria. Of course, we saw Paystack exit to Stripe, fantastic business. And I think many entrepreneurs in Nigeria are following in their footsteps and also creating new things. You referred earlier to Ant, and I think, some of the regional dynamics that are unfolding this year are regulatory, right? Fady alluded to one already around scrutiny of Chinese capital in India. That certainly had an impact, and we've seen that, given those are two important markets for us. But if you think about, for instance, in the US, regulatory scrutiny of deals like Visa Plaid, and you see also, if you see also in China, regulators stepping up all kinds of regulation, including competition, I think it'll be interesting to see how regulators on both sides of the world think about the global nature of that competition in big tech and big payments. Beyond that, I mean, there are, some certain nuances in markets like the US on the public market side. We've seen a lot more activity with SPACs, special purpose acquisition companies, that have definitely featured in the fintech industry this year, most recently with news around PaySafe, Blackstone, and CVC. And that obviously allows fintechs and their investors to mitigate some of the public market uncertainty during COVID relative to traditional IPOs. And we don't see as much of that in other markets, but there's still so much going on. I think in terms of like the substance of fintech, though, beyond investment dynamics, the West still has so much to learn from Asia in terms of embedding fintech into the wider digital ecosystem and also into the real economy. So certainly the likes of Ant and WeChat Pay in China, but also Grab and GoCheck in Southeast Asia, Paytm in India leading the way. And at Standard Chartered, what we try to do is work with platforms on both sides of the world to help them deepen their penetration across, our network in the Asia Pacific and also in more frontier markets. Across Africa and the Middle East as well, either by showing them investment opportunities or by connecting them via API with our own digital payments capabilities, which I think will continue over the course of 2021.
Terrific. Well, in the interest of time, we've got about 15 minutes on the clock left. So I'm sure the audience is for a panel that's called Investment Priorities in 2021. We've recapped 2020, talked about some of the regional differences. Let's now strictly, look ahead, right? It's January 1. We've got 365 days ahead. What are your, forecasts and prognostications for the fintech industry in 2021? Let's start sort of big picture, and then we'll get into what sectors you think will be hot and what sectors may be sidelined, because eventually it's always, capital that's being deployed and the choices you're going to make and priorities that you have. Not everything, not all boats can rise with the tide. So we'll get into this second order level of question: what do you think is hot, and what would be lower priority? Let me start off maybe this time with Fabrice. Give us a sense of, as you look into 2021, your forecasts and prognostications for the next year. What do you looking forward to?
Yeah, two mega trends. One, continued verticalization of fintech, where you had like multi-category platforms that are doing broad lending, Fundbox and factoring, that then become very specific. So you have like Produce Pay, which will do lending against the crops on the ground before they're even grown. And we're going to see these types of verticals emerge where also investors got big on Mundi doing trade finance or financing trade finance between the U.S. Mexican exporters and the U.S. importers. And that verticalization of fintech will continue with very specific solutions, vertical by vertical. And the next big mega trend for us is the fintechization, if you want, of online businesses in general. And give you two different examples. So one is a company called Tread. They're kind of a dump truck driver marketplace, and the business model there, which I kind of alluded to earlier, is factoring against the wages of the dump truck drivers. Another one, a huge one, based in the UK, is a company called Fresha or Schedule. They're basically a solution to book hairdresser appointments and barber appointments, and they're doing billions in GMV, and they decided to give it away for free. And the way they make money is they sign, because they have like 3 or 4 billion of volume going through their platform, they signed like the best deal possible with one of the payment companies, and they're making a spread on payments. And so again, a lot of companies that don't appear to be in fintech from the external factor actually are really fintech companies, at least in the monetization perspective, and that mega trend will continue.
Terrific. Fady, you want to go next?
Yeah, sure. I think one thing that I think we'll see, and maybe for my own sake, hope we'll see, is more of the action around consolidation in emerging markets. I think we've seen a lot of kind of mega mergers in payments in the developed world, and I think we've seen a handful of those in emerging markets in places like South Africa, as Dick would know, and I think we're going to see more of those as we get into kind of this next phase, as these companies in developed markets may look for other avenues of growth in these emerging markets. I mean, I think a similar trend to that is just kind of more of these companies in emerging markets, growing up and kind of maturing. I think Fabrice mentioned Klar earlier. I think it's one of the examples of kind of neobanks in emerging markets, aside from kind of the very big new bank. And I think we're just going to see more and more of these models grow and get capital in markets outside of the developed world.
Great. Nick, last but not the least, tell us, what's your prognostication for 2021?
Yeah, I mean, I'll sit on the other side. So actually, unlike Fabrice, we would talk about the unbundling of certain aspects. So I think, if we look at payments, so we're looking at guys like Phoenix and Prime. If we look at lending, we're looking at platforms that allow you to do that. I mean, I think broadly, many business vertical owners are trying to cross-sell products, and in that removing kind of optionality for those underlying businesses. And so, again, if I focus on payments and use that, what you see with guys like Phoenix and Prime is effectively trying to add a middleware layer that allows you to swap out Stripe or Adyen or WorldPay or whomever you want, depending on the countries you want, etc., and moving that from a click fee to effectively much more of a simple and lower cost SaaS solution. So I think as we see these kind of digital trends, we're going to see this unbundling and rebundling as businesses try and access different pools of capital in there. So that is really a kind of area where we're looking at. I think a second thing where we're looking at is obviously neobanks. So I think most people would have seen Revolut broke even, Starling broke even. I must say what we're seeing is that there's renewed investor sentiment behind kind of the leading neobanks now that they've proven kind of a pathway to profitability. So I would expect guys like Chime, Nubank, Clara, all the kind of leading players in each of these countries to see significant upticks on funding in this year, and really a concentration of funding behind those leading names. And then the last thing, and we haven't spoken about this, but I think 2020 leading into 2021 is when crypto came of age. I've seen smarter people moving into crypto than I've ever seen in my life. I've seen more investor money. I've seen a wider adoption. And this is very at the base of the pyramid now, and how this plays out really is so multifaceted. I think when we're looking at this is a key area for us to look at going forward. I think kind of the crypto market has completely matured and changed, radically over the last 24 months.
I think that's a terrific segue. In fact, no fintech panel talking about next year would be complete without at least a plug for crypto or blockchain. But let's spend a few minutes talking about crypto, because I can see a couple of questions that came in around that as well. So Lucy, tell us from Standard Chartered's perspective, and all the clients that you service, tell us what are the more interesting parts of the crypto space that you're looking forward to next year. I mean, we get the broader trend that there's more institutional participation in the crypto market that we've been expecting and waiting for with bated breath for the last 5 years, and finally last couple of months it seems to be happening. But just beyond that, just peel the onion a little bit more and help the audience understand what is the crypto stack like, and where is there going to be action in 2021?
Yeah, so I think mostly around infrastructure. That's the biggest need now. I'm hopeful that governments will realize the need that they have a role to play in incentivizing digital assets in an inclusive manner, helping market participants build the infrastructure or contracting them to, and including enabling technology, for instance, digital identity. So I think the UK and other jurisdictions across Asia have an opportunity to lead the way here with more thoughtful licensing frameworks and central bank actions, which will hopefully speed up that infrastructure rollout so that private actors can then pile into the space and build on top. I expect we'll see movement from the likes of Facebook's Novi, Coinbase, and a number of others, which will then encourage more institutional participants and build the network effects to allow consumers to eventually play. At Standard Chartered this week, we announced the launch of Zodia, which is our crypto custody venture, which also we think will be an important component of the new market.
Terrific. Fabrice or Fady, let's I know you guys may not be super focused or specialized in crypto, but to the extent that you are observers of the market, just talk about the crypto space and your projections for next year.
Sure, I can go ahead. I mean, we actually are spending quite a bit of time on it. We're part of DM, which was formerly Libra as well, so kind of the initiative of Facebook that Lucy spoke about. And I think that as it gets off the ground, could be really a transformational force for helping governments adopt central bank digital currencies. And I think that really is going to be a big trend for 2021. We've seen China do it already. Companies like JD.com accept it. And I think that really is going to be a galvanizing force for the West to think, oh, well, China's done this. We need to get our act together and start adopting this. And so I think that's an interesting trend that we're definitely going to see. We're also involved in a company called Bakkt, which started off as the digital currency arm of the New York Stock Exchange, but has changed a lot to actually be involved in payments and allowing folks to not just trade digital currencies, but any digital assets, whether that's loyalty points, things like that, and allow them to be tradable and easily redeemable. So I think there's a trend coming around just broader digital assets and kind of monetizing those in addition to just digital currencies.
Terrific. Fabrice?
Yeah, look, on our side, we're actually reasonably early in crypto, because as a gamer, I was mining crypto using my GPUs and when I was not using them until ASICs came along. Look, where we stand today is frankly, Bitcoin is establishing itself as digital gold. So it's a store of value more than a means of payment. And that's becoming generally accepted, and we're seeing trading volumes and storage volumes to continue to go up in that category. We're still at the infrastructure building level. There's no real killer app other than being digital gold for Bitcoin, and so right now the investment, there's no application level companies are being built. Like right now, we're not investing in crypto-based marketplaces. There are a few crypto applications that are starting to pop up. For instance, we're investors in a few companies that do chemical grain trading or eliminate double counting in carbon credit trading by using crypto and an open ledger. So there are a few applications that are starting to emerge, but we're still very early here. So we're still more at the giving people access to crypto a la Coinbase and building the underlying infrastructure for building applications later on than anything else. And for fun, by the way, on our end, we built a prop trading firm in crypto that's doing really, really well. But again, like not mass market consumer applications.
Terrific. Well, we've got 4 minutes left. Let me ask, starting off with Lucy, tell us your one compelling idea, investment opportunity that not just you're focusing on, your clients are focusing on, but maybe if you want to offer up a recommendation, what the audience should focus on, one compelling idea for 2021. And if you can be as specific as possible, it'd be great.
Yeah, something I've been thinking about more recently. It's perhaps not the sexiest, but I think there's a big opportunity for investment in automated, real-time, and sophisticated financial crime compliance technology, because that's so fundamental to getting payments right as we scale cross-jurisdictionally. And there's still so much variation and rapid evolution across jurisdictions. So fintechs and banks are having to constantly retool our solutions for different local contexts and engage with regulators in different ways as they evolve their approach. So to the extent that the risk management technology is still in development, I think investors will be increasingly alive now to fintechs that have the skill set and culture for good governance in the absence of fully tech-enabled controls. But I think that's where we should be investing more time as an incumbent bank, but also fintechs and big tech platforms as they dabble in this space. And hopefully regulators can be collaborative with market participants on that work.
Perfect. Financial crime. Nick, one compelling idea for 2021.
Yeah, sure. So I think when we're looking at this, I think one of the key things we spoke today is about and Fabrice used the word fintechization, and maybe I'll just paraphrase that. But
I'm stealing his one, yeah.
Yeah. So I think when we're looking at this and specifically take an emerging market angle, we're spending a lot of time saying actually the difficulty in many of these markets is accessing clients, right? So people have spent large amounts of time building out networks into businesses.
I'm going to ask you to speed up. We've got 2 minutes left. I need to squeeze in Fady and Fabrice as well. So very quick, one compelling idea.
So we're buying old economy businesses and retooling them with new economy revenue models.
Love it. Fady, one compelling idea for 2021 the audience should focus on.
Sure. I think one area that doesn't get enough kind of airplay is around digital remittances. I think it's an area where, the competitive landscape with traditional remittance companies, but also with other digital remittance players is fairly open. And I think more and more we're seeing people move to that. We saw it during the pandemic, and I think it's a trend we're going to continue to see in 2021. So digital remittances.
Terrific. Last 60 seconds for Fabrice. 2021, compelling idea.
Invest in Stripe, invest in Rapid, which is a marketplace payments company, and invest in Clearbank. And this allows you to play really the category.
Your portfolio companies.
Of course.
That just happens to be a coincidence, right?
Sheer coincidence.
Terrific. Well, thank you, folks. It's a tremendous spirited discussion. We could go on for another hour. We have a couple of questions here that we may not have time for, but we've got a minute left. So let me just take that to thank all the audience for attending for the Singapore FinTech Festival, for giving us an opportunity to share perspective. And for my tremendous panel here, Lucy Demery from Standard Chartered Bank, Fady Abdel-Nour from PayU, Nick from Apis Partners, and Fabrice Grinda from FJ Labs. Thank you very much, guys, for joining. All the best for 2021.
Thanks, everyone.
Thank you.
And our thanks to Dushyant Shahrawat there, who is the Director of Strategic Insights and Advisory FinTech Investment Banking at Rosenblatt Securities.